clearly under a blue wave scenario, there's going to be some ramifications for consumer discretionary and retail that have to be considered. First and foremost, there's taxes. Most retail companies that we cover are almost entirely U.S.-based. That means material implications from Biden's proposed change in the corporate tax rate from 21 to 28%. So that's clearly a negative. Secondly, wages. Biden proposes $15 minimum wage at the federal level from about $7.25 today. So clearly many states are already well above that, and several have plans to go at 15 over time. But again, this is a net negative to retailer costs to some degree. So those are the first two negatives that we got to start with.
Sure.
And so from there, you start to think about, well, what's the upside? There's clearly a wild card here. It's stimulus. We saw what stimulus did to consumer demand this year when COVID hit. So we've already talked about the bad guys on taxes and wages, but remember, those drive demand from consumer spending on the low end, lower taxes for consumers, higher wages for consumers. So there are puts and takes here, Kelly, that you got to consider.
Yeah. So let's go through some of the names, because basically the scenario that you're describing is kind of profit margin pressure. And you see names like Signet, like Gap, like Urban Outfitters, Boot Barn, right? I mean, these are some companies who could be especially at risk of that in terms of that profit margin pressure.
Yeah, I think when you just take the costs and the taxes for what they are and you flow them through the models, those are the guys that are going to be the most impacted because of their geographic mix, their margin structures, et cetera. But again, I do think it's important to think about the wild card here. It's easy for you and me to raise tax rates and costs in the model and see what it spits out. But a key thing we're trying to talk about in the report today is under a blue wave scenario, we're not only going to get the benefit of spending on the low end, but we're likely going to see the HEROES Act come into play. So while things like healthcare and climate change clearly are not going to impact my sector, things that are included there do have an impact are things like another round of relief checks, hazard pay for essential workers, expanded unemployment assistance. Then all of a sudden, we're talking more about a demand-driven upside sector and less about the cost. So that's why I'm kind of saying you got to look at it from both angles.
Shepard Smith here. Thanks for watching CNBC on YouTube.